I mean, I think it has to be high enough to incentivize domestic mining. That's really, to me, what it's all about. Silver is found in nature in a form called epithermal. Your skin is epidermis, right near the surface. So the big deposits were exploited and found a long time ago. So when you realize that only about 20% of all the silver that came to the market last year, about 170 million ounces, came from primary silver mining. The rest of it is the majority of it comes from byproduct mining of lead, copper, or zinc. And so these companies, number one, have no incentive to look for silver. They just stumble across it. And so, in order to find silver in North America, you would have to dig deeper and you know, with silver price being in the crapper for so many years, there wasn't much in the way of um, exploration. And so, in order to incentivize companies to make a profit when they're looking for silver and mining it, which takes time in and of itself just to get up to speed, there has to be a floor high enough in order to incentivize that. So, what they're doing right now, in my mind, is
Surfer, the like become your best friend. Balances in your bank and stack. What's up, everybody? I'm Jared, the Stacking Surfer, and I've got another awesome interview for you today. I've got Andy Schectman, the CEO of Miles Franklin, here today, and I'm going to go ahead and bring him up here. Andy, it's good to have you back.
good to see you again, Jared. It was nice having you on my show the other day, and good to be back here in the comfortable seat that I'm used to. Good to see you again.
It's awesome, Andy, and people always appreciate being able to see a video from your house every once in a while as well,
Yeah,
which is
yeah.
great.
Well, I should do my Monday Q&As from my house, or they're what the spirit of what we wanted to do with it is all about, a little bit more relaxed. And I used to follow a guy named Richard Russell. He was my mentor. I loved him.
Okay.
I miss him every day. He lived not too far from where you are back in the day. And he when I would read him, which he was tremendously astute, economics and markets and all of that stuff. But what I really enjoyed the most was getting to know who he was. It's one thing to find someone credible that you trust and like their information and understand that they're trying to disseminate it the right way, like Richard Russell was to me. But getting to know who he is, a World War II bombardier, and talking about what it was like flying over Germany in World War II in a what was it, B-22 or whatever they were called, the big bombers. And um, he was into cactus and standard poodles and all. You learn about someone, and it just, to me, that was the fun of it. And that's why when I had you on my show, I kind of dug into the surfing side of things and how'd you
Yeah.
come up with that name. And it's important, that because we all put our pants on the same way and one leg at a time, right? And so I just think that it's nice to get to know people. So I appreciate you saying that, and take it to heart also.
I love it. Yeah. So much of this is building a community. It's getting to know each other. It's being able to share. So we definitely want to do a live stream with you again soon. I think people would love to do that. So we'll get that
Do it.
scheduled for everybody.
Yeah.
So Andy, we're in the kind of shutdown of the Chinese New Year right now.
Right.
And I'm already seeing prices starting to crash again. I expected that this was going to happen. Have any of the fundamentals changed yet? Are we still looking for a more bullish, period of time here over the next several months to the next several years in gold and silver? Or, is the West going to be able to continue to suppress the price of silver and gold?
No, I don't believe that they will be able to continue to suppress things the way that they have. I mean, you have the former IMF deputy director and ex People's Bank of China deputy governor. His name was Zhu Min, and he just came out and said that the global trust in the US dollar is slipping, and it's a top risk this year. And he cites that the dollar share of global forex reserves has fallen to just about 55% from 70 in years past. And and the dollar's drop is to the benefit of gold, the euro, and the yuan as they are rising. And he cites it as a direct signal that the markets are diversifying away from the dollar. He also went on to say that Fed rate cuts are not optional, that they're a key tool to steady markets and confidence. And look, this is a situation where the dollar system is based on confidence, Jared, and the confidence is gone in many ways. And so, on one hand, you look at what China is doing. They just told their large banks to stop loading up on U.S. Treasuries. In fact, to trim exposure on them. They are starting to treat U.S. government debt or our bonds like it's a concentration risk, not the ultimate safe haven that we've always been told. And they're speeding up their exit from the dollar and de-risking the dollar system. I think that's something from a primary standpoint that people need to understand. When you talk about you know what's going on with the silver market, yeah, we knew that this was going to happen. I'll get to that in 1 second. I wanted to talk about also David Einhorn, the billionaire who thinks gold is already on its way to becoming the world's ultimate reserve asset, that it's starting to replace the treasuries. You're getting guys like Ray Dalio and now David Einhorn saying these things out loud. He cites the central bank buying, as we've talked about forever, and that almost 80% of reserve managers see that gold will be a higher share of reserves 5 years from now. So the macro side of things still looks very good. And when you talk about what's going on with silver, they had to try and do this. We're 10 days away, Jared, from first notice day on the March silver contract. And people need to understand what this means. I haven't looked yet today because we won't get that information until tomorrow or the next day. But open interest as of Friday was still at just under 59,000 contracts. I think it was 58,770 contracts. And each contract is 5,000 ounces of silver. So that's 294 million ounces of silver still open in March, meaning that they could stand for delivery if they wanted to. I just heard my phone, got to shut that ringer off. So they could do that. And look, a bunch of it is rolled to May because last week it was 400 million ounces that were still open. But, and that's normal, right? A lot of it will roll to the next big delivery month, which is May, not April. But it's still, to have this huge of an open interest this close to the first notice is noteworthy. If even half of that open interest actually decided to stand for delivery, you're talking 147 million ounces that would need to get sourced. And the interesting thing about this is that the registered silver, the metal that is actually available to deliver, is around 90 million ounces. So do the math. Demand for delivery spikes. COMEX has two options: either drain the registered inventory fast or force incentives like higher premiums or roll pressure, meaning we want you to cash settle or roll it into the next month, and we'll give you a premium, a carrot, let's call it, to do so. We'll pay you extra money to settle in cash or to roll it forward. And this is how stress shows up, not in the price, it's in the delivery mechanics. And that is what we're seeing. And the market stays calm until it doesn't. So when if even 20% of that silver stands for delivery, that's 50 million ounces with a 90 million ounce registered category. It's putting serious stress on the market. And, you see things like the Bloomberg headline last week, which ran cover for the paper smash. And these idiots, incentivize the force index selling and add that to the margin hikes and the way that the algos are dumping when this starts to roll. They say Russia is going back on the dollar system. And in 10 seconds, $3.4 trillion worth of metal gets evaporated in gains as everything dumps. And then, a couple of days later, Russia says, we're on record saying we're not going back to the dollar system. So Bloomberg pumped the opposite narrative and allowed a lot of these big players that are offsides, meaning they have too much of a short position, to get on sides to cover exposure. So nothing's changed. In fact, it's just desperation at the 12th hour here by the big players. So yeah, and if you look at the way the previous bull markets went in this industry in 74 up to 1980, and then also the 2011, you experience large pullbacks before the big move happens. And so this is normal. It's shaking out all of the speculation, if you will, and transferring the metal to very strong hands right now. So yeah, I see nothing that's changed. If anything, I just see a market that was built by banks that trade credit, not metal. And real demand is beginning to show up in places like Shanghai. Real price discovery is shifting there with the $10 spread between the West and Shanghai right now. This leaves New York and London chasing. And as long as the Western paper market stays in many respects disconnected to Shanghai, then you'll continue to see silver get pulled out of the West and sent to where it's valued over there. And that's what is happening. A lot of people say, well, what about the what's it called? The VAT tax, which is about 13%. That's true, but it's on the its onus is on the recipient of the metal when the metal leaves the Shanghai exchange. So if JP Morgan sends 50 million ounces of silver at a $10 premium and makes all $500 million, they're not paying the VAT tax. It's the recipient when the metal leaves the Shanghai exchange. It's on them. So they're paying a $10 premium plus a VAT tax. That goes to show how much they value silver over the Western paper price. So no, nothing's changed. And I just think that it's going to be very volatile. And you got to have strong fingertips and a real strong conviction to see this one through.
You do. And I've covered that with Eric Young, Hong Kong, at 9888 over on X. And, he actually broke it on my channel, the story about a month ago. To really hit that home, because a lot of people have misconception around the VAT tax or the VAT tax, and they're trying to put that into the calculation. It's not there. So there is a huge incentive for arbitrage right now.
Well, think about that. I mean, normally arbitrage, it ends quickly because all the money flows to where the arbitrage is.
Totally.
Well, they're not letting it end. They're keeping the premium there to entice this continual sucking of metal out of the West. That if you listen closely, you hear that sucking sound. Not only are they going to pay that premium, but they're paying a premium and the VAT tax ultimately. So it goes to show what they really think about the price of gold and silver, that its value is far more than the paper currency that is being used to buy it. And that's exactly what you're seeing in that. So at the same time, this is why you see backwardation, because it's like the forwards and the futures are starting to feel to many as maybe undeliverable, or the risk is not worth that extra vig out in the future. So normally markets work in contango, where the further out you go, the higher the price you pay because of the cost of storage, the cost of insurance, the time value of money, interest and stuff. But now they're saying, you know what? These forwards are too nerve-wracking to me. And I wonder if there's going to be a problem or a default, a force majeure, an undeliverability. So markets, you can't source that metal. You can't hedge easily right now. And, I just think that what you are seeing is a situation where there is what started out as a tiptoe and then a little walk and then maybe a jaunt and maybe just a little trot, all of a sudden turns into a sprint and an all-out, bust ass to get as much as you can. We're not there yet. A lot of people say, well, why didn't the Chinese or the Russians or the Saudis, why don't they just spend all that extra money they have and buy everything? Because just like that, you cut off your nose to spite your face. Instead, as the title of my podcast is, little by little, they continue to chip away at the available stock supply of metal all around the globe, and have done so quite successfully, to where it's now becoming realization. And I think the realization is evidenced by whoever in the United States said, this is happening. We need to stand for delivery. And I don't mean to keep harping on it, because I do a lot, but to me, it's all that really matters, Jared. At that rate, these people do not fuck around. at that level, when they're spending billions upon billions every single month, billions and billions and billions and billions. And not only do these people not fuck around, why is there not a word by the mainstream as to who it is or that it's even happening? You see, they catch on to the fact that gold and silver have gone higher, and that's their journalistic integrity. They're full of crap is what they are, because they haven't looked underneath the hood. It's not that the price of gold and silver have outperformed and have gone up higher. It's that who's standing for delivery to amounts that far exceed anything what the world has ever seen here in the United States on a habitual, continual 16-month in a row basis. When that question gets answered or even asked, then I'll feel a little bit maybe less convicted that we are a long ways away from where this ultimately ends up, because the big money is using this cover of drive-by shooting, of raising of margins, of price that is very volatile and frightening, to run cover for standing for delivery for massive amounts. And they are more than happy to knock it down and take delivery at subsidized prices. At the same time, knock out all the levered longs who are on margin, who aren't able to continue to post margin in this environment. This is classic shake the hell out of the bushes. And it can't go on forever because the stockpiles of availability are at record lows or fast approaching it. And at some point, paper promises that are no longer trusted when there's nothing standing behind it, well, that's a problem, right? And that's where we're at, and it's starting to accelerate. So that walk, that fast-paced walk, could very quickly turn into a jog, a sprint, and an all-out, get it now. We're not quite there, but you can feel it accelerating if you take a step back and look at it for what it is.
Well, that's true. When you look at it, David Bateman's the only person I know of that's in that category where they've come out and basically shown the delivery. And he's talked about how much he's purchased last year, and what his plans are. It's holding it. He really believes.
I talked with him the other day by text when he was looking to buy $100 million worth of junk silver. Now, after talking, he decided to go a different route and buy 1,000-ounce silver bars. But this is a guy that, and I told him, I commended his candor, and I'm a big fan, that this is a guy who made his fortune in IT and selling a company, but sees things very clearly and is not embarrassed to talk about it or to be different, to be a contrarian. And I think this is part of where we are in the cycle right now. If you're not a contrarian, you'll end up being a victim. And I think he understands that and has the courage to do it. He has my admiration, my respect. But this is a guy that even said he made more money in 1 year in silver than he did in selling his tech company. So, of course, not all of us have the ability to buy hundreds of millions of dollars worth of silver, but the point is still the same. He buy whatever the hell he wants, and as much of it as he wants. He's choosing silver, and to be open about it, and has stood for delivery. And I think when you talk about what delivery means, it means it's an asset that is simultaneously no one else's liability. It gives you that liquidity without any counterparty risk or counterparty layer that you first need to get through. So there's a lot to be said for it. It's a very strange time right now, Jared. I've never seen a time like this in my career ever, because the attempt by the CME group to massively raise margins in many ways has distorted this market, because it's put so much pressure on the refiners, who are all shut down. Because if the refiners are taking in metal that need to be broken down in various forms, whether it be, like flatware or knives and forks and stuff that are silver, like sterling, a knife, the blade is stainless steel. The handle is plaster. It's a little coating of sterling silver over the handle. The amount of effort it takes to snap off the blade, pull off the sterling off the handle, throw that stuff away, put it in a bin, and continue to do that with all your other stuff, then melt it down into shot, and then from shot, melt it into bars. And this takes a lot of time. Well, the refiners, with the continual increase in margin costs and the rising price of silver, for the last few months, has shut down every refinery because they're getting margin called. If they have 50 million in inventory that they've paid the public, they have to hedge 50 million. In other words, they sell short. And so they're market neutral. But it takes so much time to process what they're refining that they're not even breaking it down or melting it down yet before their margin called. And so it shut down a massive source of liquidity. The small dealers like your local coin shops who don't hedge, if they take in 100 grand of silver eagles and the price of silver falls by $8 like we've seen, these big moves up 8 down 8, which we never would have dreamed of, right? I remember telling Kevin, who works for me, that you will see days of multiple dollar increases. And he's like, well, it never moves up more than $1. Well, true. Now we are. And I think we'll see that even to a much greater extent as real price discovery comes into play. But these refiners were margin called, shut down, and the small companies, small dealers who don't hedge, if you buy it and pay spot and it falls by $8 on 100,000 worth of silver and 1,000 ounces, you're down $8,000. You're not going to get that back. You make a fraction of that when you sell silver. And so the point of it is that the small dealers who don't hedge have to be way back a spot. The dealers that are hedging, a week or two before Christmas, if we typically have 2 million ounces of silver in a warehouse, and we hedge it with futures contracts, a few weeks before Christmas, it was about $16,000-$17,000 to hedge 5,000 ounces to buy a contract, one futures contract, 5,000 ounces. Now it's almost 50,000. The cost has gone up so much that even the big companies like ourselves, if you don't have 50 million bucks in your margin account, you're not holding a big inventory. And that's just silver. What about gold and platinum? You have to hedge it. Well, the prices continue to go higher on the margin account, which has forced all the speculators out of COMEX, but it's really did a number on this industry for right now, where premiums are very disconnected. They're high buy prices and low bid prices. I've never seen this in 36 years. Never, ever, nothing like it. It's just a weird time. But you can see the desperation that they are using to slow the speculative rise by knocking down or raising margins so high that it knocks out a lot of the even big traders that were using margin. They just can't afford to continue to post higher and higher and higher margin requirements, so they sell and get out, and selling begets selling begets selling. Well, the big money standing for delivery for the past 16 months, there you get yippee, and they stand for give it to me and I'll pay cash. I'm not using margin, and they'll take it at a 30-40% discount from where it was just a few months ago. So yes, nothing's changed except the volatility will get higher, the desperation will become more acute. And in order to see this one through, you're going to have to hang on tight because it will be bumpy, and the bull is going to try every chance it gets to throw you off its back. Hang on if you believe in it, because I think nothing, to your point, nothing has changed at all.
I love it. So, Andy, I want to show you something I saw on an X post yesterday to see if you have heard anything about this and just to get a little bit of your thoughts on it. I'm just going to add it to the stage here. Hopefully you can see it a little bit. But what I saw was a repost.
Squad douche.
Okay, I mean, I'll describe what it is. So we've got Walter Bloomberg. It's at DEITAONE. He said that there is a bunch of a surge in $20,000 gold calls for the end of the year.
11,000 of them.
Yeah, let's see if he has the detail down here. I don't know if I can totally read it either. So maybe it's 11,000, but it's significant there. So
yeah, it's a few $1 million worth. Someone is betting that.
Why would they do that?
They did a call spread between 15,000 and 20,000 by the end of the year. Someone's betting that gold ends up 3 times higher than it is today by December. Either you got a lot of money just to piss away, or you know something that others don't. And it's when you look at it on a chart, it stands out like a sore thumb. It really does. Like you can see just this huge level of interest into December between 15 and 20,000. Could that happen? I've been saying for a very long time, I believe that the dollar, they want to default on the dollar standard. It's the only way not only to pay down the debt, but to ever have any intention, as we've talked about before, to reshore manufacturing. And Judy Shelton's theory comes into play on the backside of that, the Genius Act, which is the movement of money via stablecoins that goes into effect early next year in January. All of these things come into play to achieve what I think they're trying to do. But yeah, I mean, whether they revalue it outright, where the government says, gold is now revalued the way that Roosevelt did in 33, or Nixon did in 71, 72 and 73. He closed the window at 35, revalued it to 38 and 72 and to 42, 22 and 73. In both instances, the dollar was devalued, just like Roosevelt did, paid everyone $20.67 on a $20 gold coin, with a dozen eggs being a nickel. 67 cents was great. And then he immediately devalued the dollar by 40%, making gold $35. So could we see a period of time where the government independently revalues gold? A lot of people think that can happen. In fact, most central banks on the planet keep gold in what's called the gold revaluation account. Is it a possibility? Sure. I think it's probably even easier to let it move up organically before they revalue it. And maybe that's when they plan on doing it, right leading into the beginning of the year, the Genius Act. I don't know. But all I can tell you is that someone or some people or some entities have placed a very large bet that gold will be between $15,000 and $20,000 in December. It will be interesting to see how that all plays out.
And what I think is interesting about that is it can kind of become a self-fulfilling prophecy, right? And I think a lot of that's what we're seeing here. People aren't trusting the paper as much. They're definitely wanting to have the physical. They're standing for delivery. Bankers are very resourceful. Things should have fallen apart in 2008. We should have had a complete crash of the banks and a restart. Real estate should have had a complete crash. We ended up printing a lot of money during that time. And I look at it just now as well. To your point, we've got a lot of debt coming up this year that has to be refinanced. And so it makes no sense whatsoever that rates are not going to be coming down. The country needs that in order to stay somewhat solvent and to not default on its debt. So
right, but the problem then is, who wants your debt when you're lowering rates synthetically and forcing them down? Who wants your debt when you have shown zero fiscal restraint? Zero. And continue to, with reckless abandon and fiscal irresponsibility, print money like it's going out of style. It's very interesting. We had and you're right. I mean, but this is the really the crux of the issue, right? Who's going to finance all of this stuff? Which is a problem that we will continue, I think, to have. And when you look at, like, for example, they bring in Doge, which really didn't do much. But one of the things that Doge did usher in is, in 2025, the federal workforce was cut by 270,000 people in under a year. That was the largest peacetime reduction on record per the Cato Institute. And yet spending still rose. They spent $7 trillion in fiscal year 2025, $300 billion more than the year before, which is, the bottom line is, it tells you that we could fire. If you look at right now, the federal payroll is about $336 billion. It's 5% of the budget. You could fire every single person in Washington, and you'd still have, get rid of every bureaucrat, and 95% of the spending keeps on rolling because it's Medicare and Medicaid and Social Security and government military pensions, and we are broke. We're broke and we're insolvent. And so the question becomes, well, who's going to buy the bonds? And how do you finance, like, for example, your failing and your old in disrepair electrical grid, when China is every year is spending more money on grids than we do on our entire global grid. I mean, the United States, every year they're building more and more and more, so that they can be the leaders in manufacturing and AI and technology and all of that stuff. And we're not. Instead, we're spending money on, if you look at what we spent money on the previous administration, billions and billions and billions on, on helping transgender people stop smoking in Pakistan. I mean, weird crap like that, right? We're so far astray from fixing the problems, and now we're trying to get serious about it. But how? How do you lower rates and entice people to buy our debt when we're creating $1 trillion in debt every 100 days with zero fiscal restraint? I don't think you do. And so this becomes a problem. This is where the Genius Act comes into play. These are the things that are happening. And this is why, really, this is a system that's all about trust. Who trusts us anymore? People say, well, who trusts China? Well, China is trying to do things where they're using the redeemability of the digital yuan into gold. And so that the trust is you can validate and verify the trust if your currency is in essence convertible into gold. And that is what they are doing in China on the highest of levels in trading their digital yuan. But they're also expanding their interest or their influence all through Africa in selling bonds at a lower rate than the West is. So there's lower costs involved for these emerging nations, but then everything, all of the funding of the Belt Road that these countries in Africa are borrowing in yuan, everything that they're doing is in yuan. So that chips away at the dollar settlement status, it chips away at the dollar reserve status. There's fewer and fewer and fewer countries and entities in a world that has lost trust in the West, where we have weaponized and sanctions and tariffs that are actually sanctions pretending to be tariffs, all of these things, no one trusts us anymore. And they don't trust the dollar or our fiscal restraint. So therein lies the problem. And this is why you're seeing, I think, big money across the globe, accumulate gold and silver instead of treasuries. In fact, you have the former IMF director, and he's also the ex People's Bank of China Deputy Governor Zhu Min. He just came out and said that global trust in the U.S. is completely slipping, and it's the top global macro risk this year. And he evidenced that by the fact that the dollar's share of FX reserves is down to 57% from 70, and it all has to do with weaponizing the dollar and removing any pretense of neutrality, if you will. And we aren't neutral anymore. We can pass declarations on other countries, but I always use the Iraq example. We invaded them 23 years ago. We're still there today. We went there under false pretenses. We destroyed their country looking for weapons that weren't there. We toppled their regime. We're still there. So why would people trust us when other countries can do what they feel they need to do for their own self-interest? And I'm not passing any judgment on the war, but in Ukraine, but we can kick Russia out of SWIFT, take their treasuries, and they're somehow different than what we are. Well, maybe they are, but much of the world doesn't view it that way. And so when you have the exorbitant privilege of providing the world's reserve money, it is not up to you to be judge, jury, and executioner. And that is why everyone is, moving away from the dollar. And to your point, it's funny, his message to the Fed, he came out and said, rate cuts are not optional. They are a key tool to steady markets as confidence gets tested. So, okay, the markets are falling apart. So you have to lower rates to, synthetically, again, juice the market. You made a comment in 2008. Well, people need to understand what you just said about that. In 2008, things should have collapsed. But, everyone says, if I held on, and all you had to do was hold on, you'd be ahead. Well, okay, take the $9 trillion that the Fed pumped into the system from 800 billion to over 9 trillion. Now it's down to 7 or 8 trillion, their balance sheet, but they're going the other way now. 40 billion a month in treasuries that they're rolling out. And they don't even call it quantitative easing. I don't know what the hell name they're giving it now, but it's a form of yield curve control. Yeah. It's a form of more manipulation. It's a form of adding to their balance sheet. And when the Fed adds to their balance sheet, they're in essence buying treasuries or mortgage-backed securities, pushes interest rates down and raises asset prices of bonds and of real estate and of everything. And so you take that manipulation out where other countries don't have the ability to have a Fed come in and do that. And where would we be? So all of this stuff, it's probably tiring for people to continue to follow this narrative. But even through it all, through the volatility, we've been right. And it's outperforming everything. But nothing is going to be easy when you're talking about a game this big. Challenging the dollar's reserve status, challenging the current order of things. And so I think, use your gut, use the kind of information that you're talking about, that I'm talking about here, that's right in front of you. And sometimes even using that information, using logic, using mathematics, using rational thought is inversely correlated to outcome in this industry, where you have very large entities that have the ability to inject a variable into the equation to manipulate. But in the end, Mother Nature catches us all through mathematics. You cannot run from it. You can delay it, postpone it, but the inevitability of it is real. And we're getting quickly to that point, I think, where we're running out of runway to continue this game, whether it be on the way that commodities are priced, or the way that we continue to goose the markets, goose the dollar. All of these things, they're coming to an end, and you can feel it, you can see it, you can see it in the way that the countries are pushing back against the dollar, against treasuries, building infrastructure like China and the BRICS nations are doing to compete with the dollar's hegemony. Little by little, it's happening. But we are at a point in time where the volatility will, I think, lose some people and test other people's resolve. Hang on tight, don't let go, don't sell your gold. It is obvious that gold is being reintegrated into the monetary system, and silver is critical. But there are a lot of players in the West that have been offsides for a long time, meaning on the wrong side of rising metal price, which is an existential threat to them. So every time they hit it, you wonder, are they covering? Are they getting to the point where they are now net long, much more than we learned by the Economic Times article that said so, and the commitment of traders? But net long could be you're long 12 and short 11. That can still kill you. You need to be long 20 and short 1 or 2 maybe, and you'll live. But if you are net short, you're on the wrong side of this market, it can put you out of business, like it did Bear Stearns. And for those people who challenge that assessment, as I've always said on your show and others, watch the Chris Marcus, Bart Chilton interview from a few years ago. Arcadia Economics, Bart Chilton, Chilton. He was the CFTC governor, head of the commodity police, who admitted a lot of this stuff and then mysteriously died 10 days later. And I'm not saying there's causation. I never have said that, but it's interesting how he either cleared his conscience as a man who knew he was at the end of the line, or maybe not. So spoke out against JP Morgan, against the Treasury, against the Fed, and admitted that this stuff happened, and that's why Bear Stearns went bankrupt. So long answer, but I hope you get the point that these are one of these counterintuitive corrections. Now, counterintuitive to the trend, to the market, but we knew Shanghai or China was closed all week in observation of the Lunar New Year thing, but we knew this was going to happen. It doesn't make it any easier when you watch it in real time, though.
It is true. So I want to take a quick intermission here just for the folks that are watching. If you guys haven't done so, please hit the subscribe, smash the bell icon. What that does is it makes sure you guys get notifications, and then also hit the thumbs up so more people will see this great message. And the other thing I just want to throw out here, I'll just put a quick banner across for us too. If you guys are looking to get a hold of Andy, you can email him at info@milesfranklin.com. Let him know StackingSurfer sent you guys as well. And if you've got questions about gold and silver or even platinum, they can definitely take care of you guys there. I have been buying from Miles Franklin. I have friends that are buying from Miles Franklin, and they always take care of them. Now, sometimes times get really busy, so I always recommend putting your phone number down there so that they can reach out to you, so you don't miss like an email coming back when you might be busy doing other things.
Yeah, and thank you for saying that. 1 out of 10 emails will get stuck in spam folder coming from a server of a corporation like ours. So anyways, yeah, no, that's great. And info at Miles Franklin, price list, questions you've heard here, mention that you came from StackingSurfer, very important. And we'd love to work with your people. Very, very much we would.
Thank you, Andy. And so what I want to do is change the topic just a little bit here, but just to close a few things on there. Just to give everybody a visual here, as a kid, I used to take root beer cans, A&W, which would really foam up. That stuff is very highly explosive. And we'd play kick the can, where we would go and hide. And someone would be blindfold, cover their eyes. They'd come out and they would call out where people were hiding, and they had to kick the can. And every so often, the can would start to get pretty beat up, and then it would start to spring a leak. And so we're at that phase, I believe, where we've not only sprung one leak, but there's probably multiple leaks springing there. And we're just about to have one more kick go where the can rips open and, all the soda goes everywhere. And I think that's, the important thing for people to realize is, we're not just, I'm not doing a channel just for fun. Okay. I mean, there's a lot of fun to doing this, but it's waking people up. It's helping you get you guys prepared for things. I saw what hit my family so extremely hard in 2008. So we covered it on your show the other day, Andy, and I'll put a link up above here for people that haven't seen that yet. My family got hit extremely hard. Okay, we lost a lot of money. We had a big empire, and the reason it got taken out is because, well, in my opinion, I think they want to reduce down to 5 banks. That's what I really think they want to have happen.
That's how you usher in a control grid. You get rid of 5,000 regional and local banks and put in 5 big banks that can then usher in digital money, the digital surveillance state, coupled with the digital ID. Yeah, I think you're probably right. That is the plan.
Yep, exactly. So take out the savings and loans first, take out the regionals next, and credit unions when you get into things like all the car loan problems that are going on out there. I'm hearing bad loans are getting potentially bundled in with good loans on car loans. It wouldn't surprise me. And then with regional banks, you've got all of the commercial real estate backed securities that could have massive problems, especially with all of the people not returning back to the offices and all this expensive real estate.
Well, and watch what AI does to that too, because
totally. It's going to keep going.
My son, who works for Miles Franklin now, was an accountant at Price Waterhouse, analyzing a real estate investment trust balance sheet every year, and that he had a client that was a real estate investment trust and a REIT. Well, what do you need to pay this kid $80,000 for and have him occupy a cubicle in an office in Manhattan when AI does it on a server in 10 seconds for free and probably is more thorough? You don't. And so not only do you have the new phenomenon of people working from home and maybe being just as, or maybe even more productive, you also have now AI, which will kneecap a lot of jobs. So these companies that have big exposure to commercial real estate, what does it mean when it comes time to renew said lease? I think it's very frightening. And who is responsible for the majority, not only of the small business loans, but of the majority of all of the real estate loans and leases? It is the regional banks. They're the ones on the hook for the majority of it.
It is. And so, I always recommend to people, buy gold and silver, have some of it close by, vault some of it, especially if you have a large value in it. If you're going to keep some cash, which I have to keep my businesses going and just, pay bills, spread it out across a couple different banks. It doesn't hurt to have a credit union, a regional bank, and a national bank. I don't know if everything will fall apart at one point or if it's going to kind of be slowly or, how that's all going to happen. But I try not to keep too much cash in the banking system itself just for those reasons. So this isn't a call to a run on the bank. We don't want that. That's only going to make things worse. But as you guys can see, all of these, when you start putting all the puzzle pieces together, you see a picture that says we can't continue to kick the can down the street forever. At some point, the day of reckoning is going to hit us hard. And, what we're trying to do is help prepare you guys for that. So, Andy, when you look at that, what are you seeing as a bullion dealer? What are you seeing happening right now? I know we had a situation where we still have the largest refinery not taking metals. We have a lot of coin shops that stopped taking, constitutional silver as well, because they were just inundated with it, as well as the refineries not taking it. For a period of time, we had a lot of small shops basically say they can't take silver at all, and they kind of closed that off. Now, they were all still taking gold, as far as I understand, which I think is a good testament to having both metals, not just silver by itself. Are you starting to see any kind of a break in that? Are you seeing the same issues? And, is this partially an issue with smaller companies not being able to, or not taking the time to short?
It's the sophistication of shorting and hedging your position. You got to know what you're doing. You get crushed. And so if you don't hedge and the volatility of the market is such, if you're not moving stuff on a continual basis, you're in a rising market that doesn't have this kind of volatility. You don't need to hedge if you have enough of a bankroll to handle the volatility. But in a market that we see right now, if you're not hedging, you're out of your flipping mind. But the cost of hedging is enormous for companies like mine, or even the very, very large primary distributors. They must have a couple $100 million in their margin account just to protect their inventory, the big primary distributors. And small companies aren't doing that. So if you take in metal and the price is that volatile, what happens if it goes against you? What if you buy $1 million worth of metal for someone, and the minute they walk out the door, before they even leave, the price drops by $4 an ounce, $5 an ounce on, on what? 10,000 ounces of silver, whatever the number may be, or 20,000 ounces of silver, 30,000, you're dead. You're dead. What are you going to do? You'll never make that money back. And so they have to bid way back of spot. For those that do hedge, like I said, it was about $15,000 a week or two before Christmas to hedge 5,000 ounces. Now it's almost 50,000 to hedge 5,000 ounces. And if you have 2 or 3 million ounces in your warehouse, as we normally do, what are you going to do? You're going to just risk it, or you're going to hedge it? You just have to have that money in a margin account. Well, that doesn't even take into account the gold and the platinum and all the other stuff, the insurance, the cost of, and this was done by the CME group to knock out speculators on COMEX. It's really done a number on this industry. We'll buy all of it back. But it's interesting with junk silver. Now, I've never would have expected this in my entire career. This goes to show that we are in a period of time where weirdness happens everywhere. Go back to 2020. It's been weird ever since. And, during the pandemic, for 4 years, nothing performed better than junk silver other than Silver Eagles. Nothing. Would have paid you $9, $10 over spot for as much as you would sell us. Now you're getting back a spot. And that is because, the refiners are all shut down because they can't hedge, because they're getting margin called and they're backed up. The small dealers are freaked out because of the volatility if they don't hedge, and the big dealers will buy it. But because of the cost of hedging and because I can buy it elsewhere for less, the bids are awful. That will change. These are anomalies in price. And if someone said to me, I got unlimited time frame, I want the best value, you buy pre-65 silver at spot or below spot. I've never seen that in 36 years where you can, get as much as you want at spot or below and on a retail level. Never. And so, will we see things go back to normal? I believe very much so we will. But you look at anyone who's really, really been successful in investing, you do things when they're out of favor. Look at David Bateman. People would have said, you're out of your fucking mind, David, to put that much money into silver. And he beat everybody, right? So the point of it is that that's how success is accomplished, by buying low and selling high, buying when there's blood in the streets. Interview Rick Roll, he's a good buddy of mine. He'll tell you the most money he ever made is when buying things when people said he was crazy. And you have to buy things when they're out of favor if you really want outsized potential. Well, I will tell you, in 36 years, I've never seen junk silver like this, ever. And when the refiners get back to, run back to speed, look, at very most, you're going to get, if you bring it to a refiner, the least you should get is 99% of melt value, because they have to melt it down, so they get 1%. But that's the very least. And normally it's much higher than that, like during the pandemic where $9, $10 over spot we were paying. So you want to take a risk on huge upside potential. Junk silver, in my mind, which is, the best value, I've never seen it like this. That to me is kind of the weirdness of the market right now.
Yeah, markets do weird things. I remember just a few years ago where the junk silver was super high. It had a huge premium on it. And it's the same with even pre-33 gold. A few years ago, the premiums were much higher than they are today.
I talked about just this topic, including the pre-33 on Liberty and Finance this morning.
Okay.
That's exactly right. from a standpoint, in 2007, 8, and 9, I flew all around the country begging people that I had sold thousands and thousands of pre-33 gold to sell it back to me. And I would sell it to the handful of auction houses that were as stupid as a mud wall, that were bidding huge premiums. So I would go to a guy like you and I'd say, Jared, look, over the last decade, I've sold you 1,000 MS63 $20 Liberties. And you paid about an 8 or 10% premium over Gold Eagles. Let me fly out to your house right now. I will hand deliver you 1,800 gold eagles for your 1,063 $20 liberties. And I did that for 2 years. I became Diamond Elite on Delta, flew all around America begging my clients to do this. And they all walked away with between 60 and 90% more gold. It's never come back to that level. I think we will see things like that again. But the point is, markets move like a pendulum from overvaluation, where we saw silver, junk silver at 910 over spot bid, what I would pay you, or $20 gold pieces where I would pay you an 80% premium to $1,000 gold spot, to buying it under value and buying 6320 libs at way less than a gold eagle. Never seen that before. This is, it's gone from one end to the other, hasn't swung back to normal fair value. But I will tell you that that is the way true entrepreneurs or true successful traders who take advantage of anomalies in price or arbitrage or whatever you want to call it, and they do so when buying things are way out of whack. It's like, who would have bought oil when it was negative 40 a barrel in 2020? Well, you should have loaded up on it, right? No one, the point of it is that when things are weird, that's when you take a position in it, when no one wants it. And realize that either the world has changed forever or you just captured a really great value with a call on future premium, which I think is highly probable. Look, you look at the inflows into the equity market, it's the all-time high right now, all-time highest retail public inflow into equities and into options, highest ever, and margin debt, highest ever. So the public's all in on debt and speculation with options and margin, when the insiders like Bezos and Zuckerberg and Buffett and Diamond, they're all exiting the stock market and standing, whoever the hell at this level is standing for delivery for billions and billions of gold and silver every single month. The public is on the opposite side of that. When the public just takes a tiptoe into that market, again, for whatever reason, you'll see premiums shoot right back to where they always have been and maybe shoot past it again into overvalued range. That's when you sell your junk and sell your 20s and move into something else. It's like playing the gold silver ratio. You can do the numismatic to bullion ratio or the junk silver to other items, where I've seen, I told people you can trade your junk silver and get more in the way of Canadian maple leafs or Australian kangaroos, more ounces, by trading your junk silver. Well, now it's the opposite of that. So there are times to buy certain items. There are times to switch out of certain items. And I would say universally, pre-65 silver and pre-33 gold are probably the best values in this industry right now.
I think so too. I've seen some great deals on those guys. So, take advantage of them. Reach out to Andy on that too. So last question for you. I've had a bunch of these questions from other people too. So I want to see if you can maybe help me answer this a little bit. We just the last few weeks, we saw silver go skyrocketing high. And, some people were calling for a top, and some people believe we have hit the top and we're coming back down off of that top. I think what we saw was a precursor to a top. I think the top's still further down the road, and I think it's going to be enormous. I think it'll be something that'll basically knock everybody's socks off that's holding silver, and we're going to have a bunch of new millionaires that have never been in that position before in their life. With that said, we started seeing games being played where Shanghai kept their price super high. I think we even had like almost a $15 to $30 spread. It was crazy. I can't remember exactly how much it was, so don't quote me on that, but there was a big spread that was there. We started having conversations coming out from the administration here where we heard a new strategic vault for, strategic minerals, which I would include silver in that and gold. And then the next day we had another announcement from J.D. Vance, Vice President of the United States, basically saying we're going to have a floor to silver. He didn't say a ceiling, he said a floor. And that's basically to stop China from siphoning all of this off. We saw prices drop. We're obviously in the Chinese New Year now, and games are being played over at the COMEX. So I expect prices to steadily go up again after that comes back. But do you see something happening soon with a floor? Do you have any idea of what that might mean? It's obviously price manipulation, which can get really messy and make things a little crazy. But Any thoughts on that?
I mean, I think it has to be high enough to incentivize domestic mining. That's
Okay.
really, to me, what it's all about. Silver is found in nature in a form called epithermal. Your skin is epidermis, right near the surface. So the big deposits were exploited and found a long time ago. So when you realize that only about 20% of all the silver that came to the market last year, about 170 million ounces, came from primary silver mining. The rest of it is the majority of it comes from byproduct mining of lead, copper, or zinc. And so these companies, number one, have no incentive to look for silver. They just stumble across it. And so in order to find silver in North America, you would have to dig deeper and with silver price being in the crapper for so many years, there wasn't much in the way of um, exploration. And so, in order to incentivize companies to make a profit when they're looking for silver and mining it, which takes time in and of itself just to get up to speed, there has to be a floor high enough in order to incentivize that. So, what they're doing right now, in my mind, is shaking out the speculators, letting those wet banks in the United States that need to clean up their balance sheet get on sides, and even more so if you are accumulating it and you are the US and you are standing for delivery, knock the price down if you have the ability to do it and stand for delivery. I mean, you're just printing money anyway. You might as well make it easier to accumulate it. And the greater the volatility, the more you get, you know, people who are investing in it and talking about it to shut up and look the other way. This is just a tool of misdirection, shall we say. The rules have not been rewritten. And I look at this as being something probably by the end of the year, we'll look back at it and see silver at much, much, much higher levels. I mean, I'm looking 10 days down the road to think, what's it going to look like? Are they trying to really knock the hell out of it leading up to that? Maybe. But what happens after China opens? Do we go right back up? What happens if there's more delivery than the registered category can really handle, or we knock down the majority of the registered silver? I just think this is one of these times where you're going to have to hang on tight, is all I'm saying, because nothing's changed at all, and the biggest money in the world is proving that to you. But if you have the ability, if you're as the behemoth that the U.S. is, and you're calling it critical, you're going to put a floor under it. You need it for the future and national security of this country. Why not smash it when you have a chance so that you can stand for delivery at subsidized prices? And I think in many respects, that's what they're doing. Not only that, it serves two purposes. Would allow those entities that are offsides, that have too much of a short exposure, to cover, and at the same time stand for delivery, which probably all ends up at the U.S. Treasury. So yeah, I think that we should expect this volatility, but also expect it to be short-lived, and done so for logical reasons that none of us want to hear about or like seeing. But in the end, if you're accumulating physical, it gives you that much longer to do so before the prices do get out of control. But yeah, price floors will come. I don't know when they'll happen, but certainly they will be done to incentivize domestic mining, because it takes so long to get up to speed. They don't have to happen tomorrow.
Yeah, I think that's a great explanation. I think that's where we're trying to go with everything, right? We want, in essence, we really don't want to be the world reserve currency anymore. We want to bring manufacturing back. We want to shore stuff up. We want to become a stronger country and more independent again.
Yeah, more mercantilist instead of globalist. And you want to take care of yourself at home rather than doing everything abroad and globalized. And I think it's just obvious globalism doesn't work for us, and being the reserve currency doesn't work either, because now we're reliant on our other foreign countries for everything from aspirin to aircraft parts and everything in between, and you can't do that. You have to have your own manufacturing base, and especially in the world we are moving into with automation, robotics, AI. If we don't, then the game is over for the young people in this country and future generations, because we're broke. As I mentioned, Ray Dalio, 60% of the country, he says, has a reading proficiency under the 6th grade. So we're broke, we're illiterate, basically insolvent. AI is coming to kneecap all the jobs. We don't make anything. And that's not a good thing when you're 200 trillion in debt. I mean, all in. So what do? You have no choice but to give up on the reserve status, and that's Triffin's dilemma for people who want to dig into that. We've talked about it a lot. The gist of it is the world needs more dollars than we can provide through trade alone. So because that happens over a long period of time, the imbalance between other currencies and the dollar is such that manufacturing flows to where it's cheapest, Cambodia or Vietnam or China, and can make the owners of the companies much more money. But that's what Triffin's dilemma says. You hollow out your manufacturing over time. And now we're at a point where we're massively indebted and don't make anything. You look at a country like China with all their problems, they have a trade surplus. They're the manufacturing engine of the world. They're the refining engine of the world, and they mine the most gold in the world, the second most silver in the world. They're buying up, infrastructure all around the world, from land in the United States, or the largest pork processing plant in the United States, or mines all throughout the Belt Road, or oil refiners, and they're building infrastructure. So no one's situation is perfect. But you look at the difference, you look at Japan. Yeah, they're having a problem with their bond market right now, too. And they're massively indebted, yet they have the largest level of savings in the world, a massive trade surplus. Everyone buys from them, and they're not the world reserve currency. So there are comparisons that you can make. But when you look at the United States, like I said, we're broke, we make nothing. We're insolvent, we're uneducated, and here comes AI. If we don't shift gears right now and find a way to bring back manufacturing, which comes from, in essence, soft defaulting on the reserve standard, if you believe in Triffin's dilemma, as not only Vice President Vance has talked about, but so did Jared Bernstein, knucklehead for sure, when he tried to explain how treasuries were created. But he was the chief economic advisor to Biden, which probably doesn't say much. But his report, Dethrone King Dollar, did, and it advocates that we can't be the reserve currency anymore. It was a good report. Because of this, it's a privilege we can no longer afford. We've screwed it up. And, if everyone had huge amounts of surplus savings, we had a trade surplus instead of a trade imbalance, then being the reserve currency is wonderful, because it keeps interest rates low as everyone takes all those dollars, uses it to buy stuff, sell it to us, and then all the excess reserves go into treasuries, keeps rates low, keeps the price of goods that we buy at Walmart cheap, and it keeps our asset prices high. But we've squandered it, and it's time to move on. That's what this is all about. Yeah. And that's why it's going to be so volatile, Jared. And this is the end of an era, of an empire, in essence, at least in terms of its reserve standard. But if I'm right, even a little bit right, on what I think Trump is trying to do, there is nobility in it. And it's something that would allow us over time to regain our greatness by being the engine of growth and production, and produce more than we consume, because now we're consumers, right? We consume more than we produce. And, I don't know when they changed it to calling us consumers from, whatever the term was before. But
I feel like it was right around 2000, somewhere around there.
Even the term consumer or consumer price index, this is all about consumption, right? And we consume more than we produce. And that's not the way to get ahead. And the Three Little Pigs story, the one with the brick house produced more than they consume. The one with the straw house consumes more than they produce. And that's where we're at right now.
I agree. And it's, we have been imperialistic, right? We've been an empire. If you don't switch over and you get hard assets at the end of these empires, then you're toast, because everything falls apart and you just have no way of rebuilding. I think what President Trump's trying to do is get as many assets as we can before the money is not worth anything and no one wants to take it, as well as the debt, right? We're getting there. We talked about the stablecoin on your channel. That was the interview. So up here, guys, again, if you want to see more about the stablecoin interview too, that's the future of where the debt's going. It's the only way they can get people to keep buying it. And the world isn't stupid, so I don't know that it's going to work, but they're going to try to do it. But real quick, just for everybody that's watching still, if you guys are joining towards the end of the show here, but reach out to Andy, info@milesfranklin.com. Let him know StackingSurfer sent you. He can send you the price list as well. Let him know what you're interested in looking at. Leave your phone number so they can reach out to you. If you haven't heard a response back from them, please try resending it. Sometimes it gets stuck into the spam folder. But Andy, I want to thank you for coming on. This was great, and wonderful interview as always.
Always, Jared. Always good to see you, brother. And stay well. My regards to your father. Hope to chat with you again soon. And until next time, stay well, man.
We will. Thank you, guys. Bye-bye.